Every entrepreneur dreams of freedom. Freedom of time, freedom of money, and freedom to choose how they work. But there's one decision that shapes all of it: how you pay yourself. Paying yourself properly, it's not just about taxes. It's about building stability, separating your personal and business finances, and setting up a long-term foundation for your wealth. The reason that you want to plan for compensation is really cash flow, is the ability to live your life. If you wait 7 months to get paid, what are you doing for those 7 months on the personal side? The whole point of this is that your business allows you to live the life that you want personally. I think that's super important. The worst thing that I ever see, and the worst thing that I hate to see, is surprises. And where surprises really can pop up if you don't have a good accountant is when you're paying yourself. Because every time you pay yourself, there's always a tax consequence to it. There's a tax consequence on the business side, there's a tax consequence on the personal side. Now with dividends, what happens is a business owner says, oh, look, I made a bunch of money, I'm gonna pull that money out. The whole point is you don't pay anything. And like, if an accountant doesn't tell you, like, can you imagine you pulled out $150,000 and now you've got $40,000 of tax, $30,000 of tax owing, but you already spent that $150,000 because you were living your life, right? The way you thought you were living it. But now you've got this massive tax bill. When you were an employee, you never had to deal with that because you would always just have the taxes taken off for you. Salary versus dividends, it's part of the picture. It's just one tool in your overall compensation strategy. It's not the whole story. It's not always just cut and dry that you just, pay yourself dividends. There's certain expenses that are only eligible when you pay yourself a salary. If you go back to times of COVID, there was a lot of issues with people that were paying themselves dividend and not salary. Sometimes you look at mortgage brokers, they're looking for consistent salary payments. Like, the big question I ask is, like, what is your lifestyle? Like, how much do you need to live your lifestyle? That's step one. Because once we figure that out, now we know how much should we be pulling. Once we've done that, we look at the business and see how is the business performing. And does it make sense? Like, if you're gonna make this much money in the business, you don't wanna just have the business overflowing with cash. It's a great problem to have. You're gonna get taxed when you pull it out. So you wanna be careful with that. You'd rather not get taxed on $500,000 at once. You'd rather be taxed on $100,000 5 times, like over 5 years. If you're the type of person that is like, I'm doing great now, but I don't know, where I'm gonna sit when I'm 65, 70 years old, maybe salary is the right option for you. You do pay into CPP, so your retirement is your business. It's selling that business that is the retirement. Plan ahead with expert insight. Ask us about our advisory services. To dive deeper, download our free ebooks, The Path to Starting Your Own Business and How to Set Up Payroll Like a Pro. Leave a comment down below and we'll send you a copy.